Hello, Warriors. It's Dale Pinker with TradeGate Hub with your pre-Fed update. We're getting a lot of front running in front of the Fed. Let me ask you something, traders. What do you think Powell's going to say tomorrow? Currency markets are looking for more dovishness. You can see it happening in US dollar yen right here, breaking down from a little bit of a mini head and shoulders pattern right here. So let's take a quick look at this. Kind of have this straight line here that we're breaking down out of. Perhaps now we're going to head down towards that 107 level. One of the reasons being after the reversal we had in 10-year, you have softer rates right now, again, front running the Fed. I don't think we're going to take out this 113 low reversal that we had from last week, but perhaps this could end up being a holding area, something like this, develop some type of channel in here. Excuse my, let's get back to this, which could take rates maybe back down towards the 120 level in the days before. Right now, we're trading 123. Also, the front running affecting euro. Euro, after failing to break out on the ECB, is trying to here. The only thing that keeps me skeptical about the euro is there's an awful lot of liquidity providers with their sell stops underneath the 1750 level. And the only markets that are not looking for a front running Fed is happening in the S&Ps right now. We're down 21 handles. NASDAQ giving up the ghost a little bit too. So it looks like FX traders and risk on equity traders are looking at two different things. I've been pounding the drum on the NASDAQ, and even though we were at new highs in the S&Ps and NASDAQ, which I thought we had peaked the week before, we're still under accumulation happening here in the VIX. We didn't get anywhere even close to recent lows at 14, even though the market has made new highs. So I take this as a bit of a warning sign. Looking at cable, I would not reach for it up here, but if we had some type of dollar bounce, I'm game here at, the 136 and a half level, 137 level for the long side. Now, if we go straight up and this dollar correction, which most likely now is underway, and I do call it a correction. So if we do have this correction, you have to look at this 9142 level. Okay, this was an important breakout level. So we're about 100 points away. That could take the euro up to 1930. I really think the euro, again, unless we could close back over 120, I would use rallies to sell between 1930 and 120. I thought that we would probably clean out stops first. With the Fed, everything and anything can happen in this business, so you have to be prepared for it. I just think they're letting a lot of people off the hook. If you look at the lows from last week here, it was 117.54. Which means it never took out the stops of people that put them in here at 1751. Would have been much bullish if we'd had liquidation underneath it. So we'll see if this is just going to be another failing rally. The dollar has had one heck of a rally in the last several weeks, last couple months, and you could see by this little bit of a wedge line that it started to lose momentum. See the RSI here. So I would view any pullback in the dollar as a very good buying opportunity. Again, here at this 91.40 level, euro, I figure about 119.30, another 100 points from here, maybe 1980, and with a 120 being the bull bear line in the sand. And with the pound, I think it's going to be up around this 139.65 level, which about another 140 pips. I don't think you'll see closes back over 140. So what I'm looking for is the euro could rally back to in the 119 handles, and then I'm looking for one more good decline. The dollar down to 91.40, and then if we had equality from here, so let's just measure this move right here from 89 and a half to 93.19. would give us about 460. So 460 from 9140 is going to give us a 96 Dixie. So that's my target. Even though we're pulling back, I still think we're going to get up to this 96 level, and that'll be a position short for the dollar. Then I think we could really have a dollar rout. From there, especially that's going to be a battleground. We start closing over 97. I'll reassess, but this to me is going to be an important battleground for the currency markets, and I'm going to view this up here as a major dollar selling opportunity. But do the right thing today, and tomorrow will take care of itself. And right now, I wouldn't be surprised to see some type of pullback into this range confluence. And I bet if you did a fib retracement of this, you have a fib coming in. In fact, why don't we try it? So from this low of the move, I know it's going to be a little bit busy, but because I have other fibs up here, but you could see 91.76 is 38% back, right? And what we have at 91.42 is going to be right around the 50% retracement of this move. That would just be a normal correction. So that's what I'm looking for. With the yen under pressure, and last week before this rally, I thought we could head towards 107. I still think that's possible. And if that's possible, yields will probably continue to decline. Not sure if we're going to make new lows on that, but they'll continue to decline. And it's not exactly the environment that I like to short gold in. I'd rather see the yen get to those levels down here and see where gold is at, because I don't think this is going to be the beginning of a bear market in US dollar yen, or the beginning, or that we're going to negate the change of trend that we had in yields and just collapse under 1%. I'd be surprised to see us under 1%. So after this plays out here in the end towards this 107 level, which you can see some weekly moving averages, it's a 200 week coming in here. That's where I think the yen could go. So we have, this and some type of pullback into 107 before we launch again. I think this is going to be a bull market, and we'll see a trade maybe up in the 120s as yields begin to increase to above. I'm looking for over 2% on the 10-year yield for the next leg up. So I think we could get to 230 or so. Looking at Canada, Canada's having a decent up day. I still think that there'll be better buying opportunities down here, more towards the 123 level, right here around this 50-day moving average. So I'm not ready to step in on this little pullback. I think, we have another 100 points in the Dixie down to 91.40 that we could most likely get some type of better entry on the long side of Canada. I'm looking for 132 for the next target, but I'm going to be patient and wait for it to get cheaper. We were long for this wave up out of the bottom and almost a three drive formation. So 123 in Looney. Aussie trying to hold, still not making new lows yet, but it's very much more vulnerable to risk off, and we are getting some pretty good risk off in the S&Ps right here. So we'll see if at 91.40 perhaps we could get a rally back to 75, 76 in Aussie. Look at this confluence right here up around the 76 level, because I don't think the position low comes in until we're under the 70 handle. So we could have a nice little rally here, maybe back towards 76. We'll see if it can hold the low. If we can't hold the low and we head down one more time in Aussie, it's not going to confirm. So again, I'm going to wait for the Fed. I'm flattened out of positions here today. If you want, you could hold it till the Fed, um, prior to the Fed announcement, but don't hold into the Fed presser. You want to react to the Fed presser. And I've given you some areas for you to pay attention to. The Dixie right now is trying to fight its way back. Again, my only skepticism of the euro charting from here is all the unelected stops that we have here. And if we do this, then the dollar, before we get 91.40, there's still a possibility that we could head up towards this 93.5 level if the Fed comes in hawkish and everyone that is front running the Fed ends up the wrong way. So, we either have 100 higher, 100 lower, and right here, we're right in between. I'm a seller of the dollar up here at 93.5, and I'm a buyer of the dollar at 91.40. So I'm not going to anticipate the Fed. I'm going to react to the Fed in those two areas. It may not be on the same day, but that's okay. I'm not pressured to do anything today, tomorrow, or even all week, or even all month. So I'm going to be patient and wait for my critical areas in the dollar. And that's going to be up here at 93.50. If we get up there, I'm a seller of the dollar, most likely a buyer of cable, because even if uh, the euro is able to clean out those stops right here, it's not going to take as much, and maybe my skepticism will be rewarded and we take it out. So I could very easily see the euro making new lows, maybe trading down to 117. And here's your reference point, just in case it happens. It's the lows right here that were, we had a low of, what was it, 1711, 1704. So attack these and maybe trade 1690, 1640. Then I'd be interested in, not being short. But as you can see, if you look at the 4 hour, I mean, there is a chance for euro to make a new low and cable to make a higher low. So if that happens, cable's going to be my preferred long rather than euro. Down here at a higher low, you'd always rather buy a market putting in higher lows than making fresh lows. So it's 100 pips either way in euro. And I'm a seller up here and I'm a buyer down here. Cable, I don't think we'll see new lows. So I'll be a buyer at a higher low, maybe around 136.5 or so. Um, Swiss, similar situation. If we get one more rally, Swiss is acting, stiffer than the euro is acting weaker. So I like that. Euro pound, I still think is headed lower, and that's why euro could make a new low and cable will not. Let's see what happens down here. Another 70 pips lower around the 84.80 level, and that'll be very close to the low of the move at 84.72. We have oil locked in this moving average range right here on the 4 hour. We're capping these rallies up here at 72.5. And with risk off, why can't we at least see some type of pullback from this recovery? Even if you're bullish oil and you think we're going to make new highs above the 76 level, I would not reach for it here. Maybe back towards 69, 68. Wait for some type of retracement. We're just distributing up here, or wait for it to break out over 72.40 to go with it. But either way, it looks like crude would be a nice buy on a break. We went from, call it 65 to 72. So $4 back would even take it to 68. I'd be an interested buyer in energy at those levels. Um, Silver and gold are still under pressure. Gold's going to take, here's this little wedge line that I'm working with, kind of a downtrend line. It looks like a descending triangle to me, and that we're, if we could get back over this 1814, 1810 level, it's going to look negative. Should carry us higher. But again, we're sitting at the support. How long can this support hold? Okay. We've had several tests of it going back to here. And then if you wanted to be a buyer at support, the market gave you one chance, gave you two chance, gave you three chances, little stop hunt here for four and now five. The more times a market knocks at the door at either resistance or support tends to weaken it, just like if you're pounding a door and trying to break in, the lock begins to falter, and eventually you um, can get that breakdown. So under 1740, which is my 1794, which is my expectation, you could be looking at 1750. This is a $40 formation here, and on a breakdown it measures 40, which would take you back down towards these lows. 1710 still is my target, and silver obviously looking much weaker. To me, it looks like we're on the verge of breaking down out of a bear flag where we could have something like this from here. So, looking for the $24 level to be challenged here, maybe 24.30, still looking negative to me. Um, Looking at here you go with the rates, the bonds are heading up with US dollar yen heading down, and I see the potential of a 1, 2, 3 up here at new highs. If that's maybe you get a flight to quality, if risk comes off. But up here, I think it's going to be when you take it into consideration with the daily or weekly. Um, this is a major resistance level up here at 154. That's probably going to be analogous to the 10-year, maybe even retesting here. So this could be a big test for yields, for the dollar, for metals. See what else we want to take a look at. Now, remember, this is a red event, and you want to be prepared to react to it. One other call that worked out, I didn't trade it, but I showed this wedge in Bitcoin last week of us beginning to come out of this wedge. Very nice move from over 31,000, about 7,000 here. So let's see. I wouldn't be short Bitcoin. Perhaps we're on our way again. But the wedge did not fulfill to the downside and then broke out to the upside. Could check on last week's video to see this was a potential buy signal. Looking at gold shares, again, it's what's kept me negative gold. I see nothing bullish on the GDX. We may be diverging a little bit here on the daily and 4 hour, but this is not a bull market to me. Here's Newmont, best of breed. We are diverging off of these lows, but premature. I think these miners are going to be a great buy sometime in the fall towards October. I just don't think the timing is here yet. In fact, my preferred scenario is a nice correction in the summer and everything, and we have a chance to buy the reflation trade cheaper and equities cheaper. So I want to wish everyone good hunting. Keep your powder dry and get ready to react as currency traders. Let me just run down your important areas that you're going to have here in euro is going to be, rallies back towards this 1930, and I don't think we'll see it close over 20. I do believe if we don't clean out the stops before we get a rally, that eventually we will. I'm still a dollar bull until we get to 96. So your big areas in the euros, if we rally, it's going to be a sell between 1930 and 120. And if we trade down to 1680, it's going to be a buy for a move back to 1930 to 120. If it's a sell first, I do believe that long-term buys will happen around the 114, 113 level. So we're only about halfway there. Similar situation in cable. If the dollar does get strong, I don't believe cable will make new lows. If we have that one more run and euro makes new lows, I think you get a higher low in cable. Remember to plan your trades and be ready to react. Don't bet on a reaction to the Fed, react to the reaction, and most of all, don't just count your pips, count your blessings. We'll see everyone prior to the Fed tomorrow. And you can join us here at TradeGate Hub, share your ideas with us, and become part of our mastermind at www.tradegatehub.com.